Ooh. Okay, I'm looking for 13 characteristic of perfect stocks. Peter Lynch. Okay, I think this is the one. Boom, 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 boom. Alright, I think I am live, you guys. Now, I like this form, so I'm just gonna keep doing it until I'm sick of it. We'll see. So, give me a minute. Let me play some music here so you could tell. Okay, let me. I'll be right back. Give me 1 second, okay? Just give me 1 second. Hold on. Where's the music? Music. Okay. Alright, guys. Hope you guys are doing okay. I know some of you are gonna watch this live stream later on, so I'm just gonna start. I know it's kind of in the morning, so people are not gonna be waking up yet. Now, I would like to kind of give you a summary of what I talked about last night, and this is Peter Lynch, 13 ingredients for the perfect stocks, right? And in my last live stream, I kind of go through all of it, and to me, Gamestop hit most of it, right? At least 7 to 8 of this characteristic in one stock. I'm not even kidding. Okay, well, it depends on who you ask. I bet they probably, if you ask CNBC, they probably be like, this is BS, right? Yes, you could twist it to whatever, these meme stock investor want to have it fit. Give me a minute. But anyway, I have my coffee right here, so forgive me from time to time. I'm gonna drink some. But anyway, so good morning, everybody. I am so enlightened to have one person. I bet you anything, it's probably me watching myself on the screen. So no, I'm kidding. I'm sure you guys will watch it later on. But so okay, the first characteristic. Let me go through it's a summary right here. Sounds dull and even better, ridiculous, right? So to me, hey, GameStop, right? That's the name, GameStop. Is it ridiculous? I don't think so. But I have a friend who thinks that it's like they should change their name or something. But yeah, it's GameStop all the way. Right? The most boring name ever. And then it does something dull, which is buying and selling goods and services and repeat, rinse and repeat, right? Old school type of business. Try to increase profit margin in the right way, slowly but surely. Number 3, it does something disagreeable. Now, think a big, okay, so this is, I wouldn't put GameStop in this because gaming is pretty agreeable, well, with the exception of like adult gaming and all that stuff, right? With shootings and, bloody, killing people, like what is it, Grand Theft Auto, right? So but GameStop doesn't make that. They only sell those things, those games that was already produced by other studio, by other company already. So I would not put GameStop in that category. But they could eventually venture out making their own game, partner up with businesses that will make games and all that stuff. So that's to be determined. A spin-off, in my opinion, I think NFT marketplace could be a spin-off one day, right? When it would be up and running. So let me touch on the NFT marketplace for a minute here, because to me that's the growth factor of the company, right? That's where the growth is going to be. That's where people are going to got blank for a minute. People are going to be missing if they think that NFT marketplace is dying, right? It's dead. Like they're not touching on that anymore. Now, in my opinion, though, it's gonna be maybe 5-6 years or even 10 before people realize the potential of the NFT marketplace, if we do develop that. But let's say that it's dead and whatever, right? To me, they could still shelf those NFT marketplace in order to sell it to a different company that would do it better than GameStop. But I don't imagine GameStop would do that. And if they do, it better be, causing the people who want to sell the NFT marketplace, or people want to buy an NFT marketplace at a very high price. How much? I wouldn't know, but I don't imagine them selling it at $10 billion, right? Because I think of NFT marketplace as a platform. It's like an eBay almost, right? It's like a iTunes even, right? And so they couldn't make those product fit to anything. And it's even bigger because you have the narrative now that you want to own your own digital asset here. And so currently you don't have any other company that allow you to do that. I'm not saying there won't be any competition later on, but current time, there's no publicly traded company that could do that for you. They might, people that want to kill GameStop could technically develop that in the background and try to compete with GameStop on that arena. But again, this is 5-10 years from now when crypto becomes more mainstream than it is now. I would argue right now, crypto is mainstream already. People just don't realize it yet. It's the beginning of the run. Anyway, so that was the spin-off. You want to invest in company that has a spin-off, and then you have institution don't own it, analysts don't follow it. So this fit GameStop to the T. Okay, we all know that the institution is not owning it, so less than 30% of institutional ownership. And analysts just trash it, right? There's only one analyst, and we all know who those people are. Oh, sorry. Number 6, rumor abounds. This also fit, I feel like. Now, GameStop doesn't involve in a toxic waste or any mafia. Don't even know how to say that. But with this type of rumor abounds, I feel like they mean by like, oh, there's always rumor. Oh, this company is going bankrupt. Oh, this company is doing some shady thing, right? So anything that is negative, I think this is what Peter Lynch talks about. Toxic waste and all that stuff. I think this is just one example, but another example could be just the media just trashing, your company. So that's also fit GameStop. There's something depressing about it. Now, I wouldn't call this one a fit because it doesn't deal with that industry. I think he's talking about funeral services and all that stuff, because nobody would be interested in doing that because it's too depressing. I would say GameStop is doing the opposite, try to entertain the crowd. It's a no-growth industry. You could argue that it is a no-growth industry right now. The media would love you to believe that about GameStop. So this would not be a fit for GameStop. In some way, it's just harder to grow this type of industry when you are going back to the old school, right? Not to say it won't be successful. In my opinion, it's just taken longer for an average investor to be patient enough to hold a company for a long time to at least realize this type of thing. But you could bet it is a stable way to do business, right? When you're not overly borrowing money in order to make more money for yourself, you are not stretching your infrastructure way too thin in order to make a few extra buck in the short term, right? And I think that's why we have the problem that we have now, is because the U.S. government has been spending, stretching themselves too thin, and now you have an infrastructure of a very crumbling infrastructure, right? So the foundation is not there. So the same way with the company, and this is why I invest in GameStop, because leadership doesn't want to do any acrobatic gymnastic in order to make money. They are staying strong, small growth, tiny 1 million at a time type thing, right? And this is what I like about that, because that means stability. You want that stability, especially in this time period. Like, who would want to grow and who would want to borrow money at this rate? It got niched. I would say gaming is a niche. Gamers are fanatic, just like pet owners. If you listen to Ryan Cohen on his interview on Chewy, you would understand what I mean by that. And people have to keep buying it. Now, I bet I would put game in that category. When people are depressed, they want to play games. They want to be a lot better before. So do they have to buy it? Half and half, right? If they have the money to spend, obviously they're gonna want to buy games in order to play. It's a user of technology. Of course, we are the user of technology. We use, well, as a business itself, I'm sure we have our own operating system in order to do, sales. We use e-commerce, internet, using the internet in order to sell the product. So we are doing that. So yeah, GameStop would fit in that category. Insider buying. This is amazing, right? This is the one that kind of like give it away. Let's read this. Generally, insiders sell 2.3 shares of every shares that they bought, according to Peter Lynch. Don't be too concerned with insider selling. They can sell for a variety of reasons: buying a new home, going on vacation, paying for college tuition, etc. But there's only one reason an insider will buy. He or she thinks that the stock is undervalued. So we know that, right? We know that Larry Chain, Alan Adel bought a whole bunch, right? Right after the earnings. So around like $17 or so. So if you could buy more share at a lower price than the executive out there, and I would add that to be like one of the characteristic, right? Because currently you could buy GameStop at $13 while the executive were buying it at $17. So it's severely undervalued if you think about it that way. Hi guys. Hey Moran, what's up? Oh my god, now I'm nervous. But yeah, so I'm just, let me see. So all those characteristics that I see here, GameStop hit it pretty well. So yeah, I mean, I don't know what these people are waiting for, but we all know what's going on, right? They don't want this company to win, so therefore they don't want to cover it. All right. So let me go to the, let me see. Okay, so earlier I was looking at this company right here, and it was all over the news, obviously. I think from on Friday. When did they report? No, Thursday. That's when the SEC filing here came out. So we'll look, based on my opinion, obviously, I'm not an expert on it, but they had a third quarter earnings, and apparently it's a huge miss. Now, why do I bring this company up? It's a transportation company, obviously, so it kind of predicts the economy. It determines, you could determine whether this company is doing well or doing worse. You could see what is to come for the economy, or at least could predict, what's going on the next fourth quarter. So that's why I brought it up. But let's listening in this segment right here, and I'll come back later.
Up is UPS. Shares of that company down more than 4% on a third quarter revenue miss. The company warns of economic headwinds ahead. And here with our trades, Victoria Green, Chief Investment Officer at G Squared Private Wealth and a CNBC contributor. Victoria, welcome. What do you think of UPS?
It's not a buy for me yet. They're facing multiple headwinds. Number one is the increase in labor costs that really sank their margins down to about 8% from 13%. And even their guidance has been cut twice in the last 3 months. And now they're only forecasting a recovery to about 10.8 to 11.3. And so you look at that, you have increased costs. Labor is about 58% of their overall expenses. And you had lower volumes because they had a disruption there where people ended up leaving because they were concerned on the strike. You'll always see a bump in Q4, right? You've got holidays, they're bringing on 100,000 seasonal workers. I just think you have lower revenue and higher costs. That's not really great for profits and profit margins, so I'm just not buying it here.
All righty.
All right, that's a no. What about Keurig Dr. Pepper, KDP? They're on the rise today, up more than 1%. They had a healthy Q3, reaffirmed full-year guidance. Kind of difficult in the current consumer landscape with weight loss drugs and all the rest of it. What would you do with this one?
It's a buy for me. I really like this stock. And it's funny, everybody kind of hated on staples. And then staples, especially beverages, Coke, Pepsi, and Keurig Dr. Pepper, all came through with really solid earnings. I like their product mix. Coffee is still sorting itself out. It was a little bit of a drag, but they're able to increase the realized prices. And they're kind of getting rid of some of their lower margin coffee business. So coffee's still transitioning, might be a little lumpy in Q4, but they've got a great product mix. They're continuing to even if they're having pod volumes down, they're offsetting it with volume growth elsewhere. Plus, they're about 85% U.S. generated revenue, so they don't have the FX headwinds that Pepsi and Coke face. So I really like them here, and they've cornered the market for ginger ale. They've got Schweppes, Canada Dry, and Burnin. So if you're looking in the ginger ale 7-Up market, feeling sick this winter, it's going to be a Keurig Dr. Pepper
Wow,
product.
I did not know that. I didn't know that they owned those brands. I drink a lot.
So that one was not the company that was gonna focus on. Thank you, Marantz, for posting your on Discord. Oh my God, thank you so much. You didn't have to though, but now I'm nervous. Got 10 of you guys here. Okay, so all right. So I was looking at this one. I think this is the one right here. Sorry. Showing the wrong one.
Let's start with that margin question. Margin's a big factor when it comes to transportation companies. How do you think that's going to impact the stock if it's able to even meet that margin estimate?
Well, you've already sort of highlighted what happened to the stock when they told you the third quarter number, right? The stock has been very, very weak. Effectively, what UPS did when they negotiated their contract with the Teamsters is pull forward several years of inflation into this first year. It was important for the Teamsters to get their membership paid up front. The rate of inflation moderates significantly as we move forward. And this, cost hit really hit at a time when UPS was suffering some book away due to shipper concerns about the upcoming strike, and also at a time when they're gearing up for peak season. So you really just ended up putting a huge slug of inflation onto lower productivity, and the margins got crushed. Really now what investors are focused on is what does that look like in 4Q? And then how confident is the company that they can recover progress that they've made in the last couple of years on margins as we move past this hyperinflationary period caused by the contract negotiation?
So what are you expecting when it comes to volumes? Again, UPS said they believe they lost 1.25 million in packages per day during those negotiations. We've also seen some other transports earnings. Softness continues to be the word that we hear from companies like Old Dominions and others that have reported.
Sure. I think what we're expecting is third quarter to be a trough in average daily volume. I think you'll start to see some of that share loss that happened because of the contract book away move away. I also think you've got a slightly easier comp in the fourth quarter holiday period. It's really going to come down to consumer strength and how that plays out. But UPS is really starting from a very low base, so I would expect the volumes numbers to improve as we get through fourth quarter, and you start to get back some of the operating leverage that you lost in this period when volumes were down in the mid to high single digits.
I think the question for a lot of people, is this the bottom for UPS? Give us a sense. What's your rating and your price target? What would you have to see to change either one?
Yeah, look, I do think this is the worst it's going to be for UPS in the next several years. I think as we get past this quarter, fourth quarter, sure, there's some risk around the macro, but as you start looking into 2024, that rate of inflation, UPS's labor cost is 50-60% of total OPEX. So as that labor cost inflation moderates from 6-7% in the current period to something closer to 2%, the pricing power in this industry is still very, very, very solid. FedEx is going through its own cost issues, is being reasonably disciplined around price. I think UPS is going to continue to be somewhat disciplined around price, and you're going to see an opportunity to recapture some of that margin that we've lost because of the timing of the contract. The real question for UPS CEO Carol Tomé later this morning is how quickly can she get the company back on pace to a 12% margin? And if it starts to look like that inflection is going to be very quick in the back half of 2024 and into 2025, if the economy is still weaker, you're going to be getting some margin growth, which should then be amplified as we get into the next upcycle eventually in the freight markets.
So, sorry. So I was looking at that and it was like, well, what's going on in this company, right? Why is such a fuss? And of course, transportation is pretty important when it comes to like our economy, because when you think about it, without product being shipped to your home, we're relying on so much on e-commerce, you guys. And this is why it's so important that Gamestop going into, the e-commerce as well. And, we have a good leadership here that understand this pretty well. So this is the earning for Q3. Oh my goodness. So we have this right in front of us, right? Okay, so if you take a look at the earnings here, so I hate to see this one because let me go back here. I'm kind of used to a different type of expression in this. Okay, look at the earnings, right? That's $3.1 billion, $3.9 billion from last year. So year over year, if you look at the percentage there, so 31 minus 39. I know, like I'm not doing and then divided that by 39, kind of roughly percentage-wise, 20% down, you guys, from last year. So this is why I think the S&P 500 went down pretty substantially on Friday trading. And now you know what I think about the S&P 500, right? When the S&P 500 goes down, what usually happens to GameStop? It's coming down as well. And I think it has to do with the fact that they don't want GME to be in that level where S&P 500, would be qualified for S&P 500. Let me rephrase that. When S&P 500 come down, they have to smack GameStop down in order to kind of make it difficult, right, for GameStop to qualify based on, the lower, like what is the qualification? I have to look that up later, but I'll explain it better. I think, yeah. Anyway, sorry. Okay, so that 20%, look, 21% decrease. That's huge. So to me, if I want to kind of predict what GameStop is doing next quarter three, man, if we could come flat and even make a little bit, it'd still be good, right? Because you would be UPS type of numbers here. But I don't know. I'm just like speculating at this point. Let me see. All right. What else did I do this? Okay, sorry. I'm not much of a word person, but I like to look at this right here. So forgive me. I'll link down below if you want to go and take a look at this particular balance sheet yourself. You can, and if you're a word person, go for it. This is where my bread and butter is. I love numbers. I love looking at numbers and stuff like that. It kind of like makes more sense than me reading words and stuff. And so, forgive me, you guys. So if you look at the operating margin right here, right, it's coming down for them. You mean if you look at domestic packages went up as reported. Wait, hold on. So this is the 3 months. September 30th. Okay, so this is expenses. If you look at the expenses, it went up. So that makes sense, right? Because you have wage inflation. If you've heard about a few months ago, the labor union win the fact that they could increase in pay. It's like $170. Wait, hold on. UPS worker pay increase. Pay raise. So they won the union and they were able to get a pay increase. So part-time working at least $21 an hour from $15 an hour. That's a lot of increase. Full-time worker on average $50 an hour. Close, well, 49. Yeah, so that's a substantial growth here, $170,000 here as a UPS delivery driver. So that's kind of eat up their margin right there. So, I mean, considering that's not that much increase though. Yeah. Profit margin, obviously, it went down due to that. Higher operating expenses. So, and then if you look at the net income, went down year on year. Share. Okay. So this is the 9 month. If you take into account 9 months, so if you do that math, I wonder how much percentage down. So 58.9 minus 59.3 divided by 58.9. That's not by much. Unless I'm doing the wrong math here. Hold on. 1 second. Let's do it one more time. Minus this. I'm trying to figure out the percentage. Divided by... Okay. So if you take into account 9 months, it's not down by much. I mean, it's not up by much. But look at the operating profit. So from, is that a billion? Yeah. 7 billion. 0.866 divided, minus 6.664. And then you divide it by that. So that's 5% right there. 5-6% down operating profit. So it cuts down to their profit. So that's why they trade it down. Okay, and then their total income expenses, $154 million. Man. Okay, so this is a 9 month, you guys. So, So what is the conclusion? The conclusion is that the economy is not doing as well. as they tell us. I don't know if you guys know about the GDP coming up, the number of GDP coming up. Just recently, they were reporting like there were 5% GDP up, which is like, what? GDP data. (2020) 23? Yeah, so it's increased annually close to 5% up. What? In third quarter of 2023. What is going on? So you're telling me that the GDP up in the third quarter, but then the most important company that kind of tells you, I mean, that the something doesn't add up. That's what I'm trying to tell you. It's that either this company is lying or somebody is lying up there. Who is it? The Fed? Who come up with this? Who report this? No, this is not the one. GDP one. Yeah. So what's going on? World Economic Outlook. International Monetary Fund. So this is the IMF right here, which connected to like the XRP thing too. So too much. So the US GDP grow at annual domestic all goods and services. Oh, I hate it when they do this. The shape increase come due to the Okay, let's listen to this real quick. I'll be right back.
Steve Leisman is standing by with breaking economic data. Steve, you got a second to think about it. Now you don't.
I am thinking about it. I'm waiting for it to appear online here. I don't quite have it yet. There it is. 4.9%. That's against a consensus of 4.7%, Joe. With the the Dow Jones consensus, it was 4.3 for Reuters. I don't have any details right in front of me. Now I've got some details here. Let's see. 4.9. The deflator was 3.5. It's a percentage point higher than the consensus had expected. Waiting to see here consumer spending here, which was expected to be the thing that really drove all of this. But I am interested as well, Joe, in the issue of how much business spending came along here, because if it was just the consumer, that's one thing. It's business spending that drives the economy over time. Here we go. I've got the report in front of me. Third quarter GDP 2023. Let's see if I can find the table here. Joe, I don't have the data. It's kind of trickling over. I'm going to throw it back to you. It's a beat on the upside. We had seen a lot of forecasts out there for 5%, and I'll be digging in to see what the consumer did, see what business did. But you do have that inflation inside it, which was a percentage point higher than expected. Joe?
Steve, just historically, you get the first look. If this is going to be the highest print in a while, let's say, would the second and third look at the third quarter, would it be lower than this? You have confidence this holds up at 4.9? What's this historically?
I don't,
what happened?
Joe. The average, the standard deviation on this is about a percentage point. On average, it's plus or minus 1.3 percentage points by the time they get around to truing this up 5 years from now. I think it's safe to say that the number is going to be higher than potential. It's a strong number. It's stronger than when we started estimating this quarter. But yeah, you're right. It is going to be revised again and again and again over the next several years, just because of the difficulty of counting a $21 trillion economy.
Hey, Steve, just to add to that, the U.S. jobless claims number up 10,000 to 210K. The week before, the October 14th week, jobless claims revised to 200K. Any quick thoughts on that?
Again, it's not ticking up. Apparently, I think we went through this one time. Those who are on strike do not get jobless claims, but if other factories were laid off because of that, or the company laid off workers, that would be those would be people who would be eligible for jobless claims. I am getting a little more data here. Consumer spending, 4%. The price index, ex-food, energy, and housing was plus 1.8%. So that's about half of what it was the prior quarter. So that's good news right there on inflation. And again, I do not seem to see the business spending number, but that's something I'm going to be looking for. One other thing, the ECB this morning came out at 8:15, kind of signaled, I guess you could read it as something of an extended hold in policy. What they said in their statement is that the current level of rates should help them make progress towards their goal of bringing down inflation to their target. They hadn't used that language before. It suggests that they may be on hold for a bit of the ECB, which has up until this meeting hiked 10 times in a row, Joe.
All right.
Rick, the numbers, sir.
Yes. Well, we're a few seconds early, but I'm telling you, we have a litany of numbers. We have a whole line. We're going to try to cover all of them. Of course, initial jobless claims is always a good place to start. Expecting 235,000, Andrew, 221,000.
All right, sorry about that, you guys. So, yeah, I guess the U.S. is the one who reported that. But to me, there's something that doesn't add up here, because if the GDP grow and it's not fake, then these type of companies should do pretty well. So, and when they release those type of data, you have to understand that these type of data could be edited, and they're gonna send a revise later on. Like they would say, oh yeah, we're doing great, but then behind closed door they would release a revised number later on. By that time, people would be distracted. People would be like, oh, I forgot about it, and so they're gonna revise it either down or up or whatever, based on what they think is gonna do to the market, right? And all of this is just to manipulate people into doing the wrong thing in the wrong time. Like investing in companies that you think, oh, because of this data, at face value. Therefore, and I think they know this. They know that, every single market indicator or even algorithm trade on news, and they do this to trick the algorithm to either sell the stock or buy the stock or whatever, in order not to cause the cascading event. Again, I have no evidence to back this up. How do I know this? It's just intuitively, just knowing about GameStop and how we've been trading based on algorithm for so long, and the fact that you have Citadel that has the majority of retail order in order to execute it on the lit market, right? So we all know investing in GameStop kind of teach us those type of things, right? And I kind of naturally know that, because every time we buy into GameStop, it seems like the candle is always red for some reason. And so no matter how much algorithm manipulation, you can't, compensate the truth, right, about the company. But anyway, I digress. This is not about GameStop. This is about UPS. Okay. So let me go back to the UPS thing. I think there's one more thing I like to kind of point out here. I looked at it earlier, but then I should have prepared more, honestly, you guys. I'm sorry. You have to sit through this. How's everybody doing? Giga, I think it's definitely artificial. I know, right? You're talking about the GDP thing? Okay. So for cash flow for the operation or operating activity, capital expenditure, and the likes. Okay, so cash flow positive, that's pretty good for a company, right? We want to see that. Net income for end of September of this year. Net income $8.5 billion right there. So that's good. At least they make money, you know. This is trailing 12 months, 8.5. So let me see. Income on average invested capital, 20%. Goodwill impairment charge. So yeah, they have goodwill impairment charge here of 125. I wonder if that's kind of accounted for the operating loss or eating up the operating profit here. Okay, so operating profit is up here. So all of these impairment charge kind of accounted for that. So with all of the chart, actually the adjusted operating profit is about $1 billion higher. So I think that's how it reads. So, excuse me, you guys, sorry. If you look at this right here, US, this is where I want to focus on because, you know, most of GameStop profit comes from the US. I don't remember what is the percentage. It's like close to 60 to 70% coming from the US package. And so this one, now, if this big company is kind of like going down 20%, let me see how many 20% is that? I mean, how many percentage is that? Minus that, divided by the previous year. That's 11%. So, if GameStop come out 11% less, it still beats out, you know, which we don't. I don't think we're gonna do that steep of a decline here in terms of like, you know, packaging goods and services sending across America here. So this is down 11% from last year of the same quarter, the same month. And if you look at the total, that's what you see in the beginning there, up top. So, oh my God, you guys, I'm so dumb. I just realized they give you the percentage over here. Oh my God. I'm sorry. I need a drink. I have my coffee right here. I just waste a whole bunch of you guys' time. Thank you so much for joining, you guys. But anyway, so the percentage is out here. All right, let's stop fooling around for a minute. So yeah, the all in all, these company is going down by double digit, and that is a sign of economic downturn. Okay. And this is the whole point of me showing you this particular company because it's a huge thing, right? Now, I'm not telling you this for a doom and gloom scenario here at all. I'm just telling you this to prepare yourself for the price action of GameStop. Okay? And that's the focus for me here, is because anytime I see this price going down and down and down, obviously most people would get depressed seeing this. Okay? And let me tell you the experience that I have. I touch on this with Marantz a little bit on the live stream. So, sorry, I'm moving around here. And so I got started. Now let me go back since the beginning. Okay, I got started on the stock market way back in the 2017. Okay, and before that, I got started with Bitcoin, and that's how I got introduced to stock. So at the time, I didn't know what stock is. I didn't know what it means to own a piece of a company, right? And so one of the things that I was kind of know about was Bitcoin. That was my introduction there. So I bought Bitcoin when it was, not popular. I sold for a little tiny bit of profit. Probably, all in all, in that time period, I probably had at least $200 of profit. Now, at the time, I didn't have much money at all. I started with $7 at one point, and just stash it away little by little. If I have $20, I would just buy Bitcoin with that, right? And and knowing how to own Bitcoin, the actual Bitcoin, not the Bitcoin that you buy from Robinhood at all. But at the time, I didn't know, I didn't know how valuable Bitcoin was. That's why I sold when I sold, for a small amount of profit. And then, oh man, I just got good at this. To be continued. Let my dog out real quick. I don't know why every time I get good at telling the story, but I'll be right back. Just give me 1 minute. Okay, I am back. Man, sorry about that, you guys. TikTok. I don't know what that means, Jason. Cool tune. Yes, thank you. Appreciate that. But anyway, so let me go back to what I was telling you about. So I got my started on Bitcoin, right? And this is just my immediate, initial kind of education on what it means to buy and hold something, and that would gain value later on. And so, naturally I get my training from, the up and down of Bitcoin. If you've been in Bitcoin before, you would understand what I mean by that. This is why they get the status of meme stock from, right? Is that it's like a meme. It's like a wild west type thing. And I got my training on that. So those type of drop and all that stuff doesn't faze me, right? And again, but at the time when I was here, let me go back here. Let's go back to the 1 week candle here. So when you're down here, you don't know what's going on up here, right? So I was, okay. So literally, you guys, I was right here. This is when I knew about Bitcoin, kind of nerd out about it. And back then, nobody knows the value of Bitcoin. Even the people that own like hundreds of Bitcoin don't even know what Bitcoin was. And, think about how many people have been buying from here and sold out, right here, thinking that, oh, they're making it, right? Now, I didn't buy anything back here until it's here already, right? It's like most people do. Like anytime it runs, a lot more about it because people are talking about it. It's like, oh, look, it's up this much. Oh, look, it's up this much, right? And so when I bought in, I probably bought in around this time right here, right? And kind of add more, $25 at a time here, $25 and, $10, anything that I have, and when, again, back then I didn't have a job, whatever allowance that I had at that time, whatever money just from, Christmas, from gifts, that my family would give me, I would put it away, I'm a natural saver, so that's kind of like in my blood there. But anyway, so I kind of like have a little bit of a profit here. And I don't remember when I sold my Bitcoin for a profit. And up until this point, you guys, I had like 1.8 Bitcoin at that time. So I sold it all for a very small profit, very small. My dog's coming back. And so I thought I made it, right? Hey, I make some profit. Here we go. I made it in life. And so I was like, kind of forgot about it. And this is when I opened my, what is it? Toby, come on. Out. Sorry. And so when I did that, I was like, oh, let me go into stock. And this is when I start to learn about the stock market. Okay, 1 second. But anyway, so I learned about the stock market right around here. And the first stock that I bought was Ford, right? And, before I got in, of course, this is when Robinhood kind of started to come onto the scene, right? I think 2017, that's when I opened my first Robinhood account. and learning about stock market, right? What it means to own a share of a company, what it means to own whatever. And so I bought Ford. I bought a whole bunch of other. I remember buying AMD at $10 and then sold it for a very small profit again, thinking that I'm making it. So my point here is that, so if I were to hold on to those companies that I own, whether it's Ford, I know like Ford went down pretty substantially to Friday because of their earnings and all that stuff, or strike, but at the time it was like $4 or something that I bought. So even if at the amount that it went down currently, I would still be doubling my money, right? If I had been consistent with it. Now I wouldn't own Ford at this moment in time, but the idea is that if you hold something for a long term and know the value of something, you wouldn't be like leaving, wondering, oh, what if I hold that for a long time. So I got my education from experience in seeing this without knowing what Bitcoin really was. See what I mean? I knew that it was valuable, but I didn't have the foresight to see, oh, if I hold it for longer than a year, 2 years, 10 years, I would reap the reward much more than that small little incremental gain. And this is where the trader mentality versus investor mentality comes in. And my training comes from this experience right here. I saw this was on the new, and this is where I started to pay attention to Bitcoin more. And from this point on, I learned so much about Bitcoin. This is where I become an expert, not an expert, become a lot more aware of what the network is doing, what cryptocurrencies actually is now. Like I said, we all know that there are scam coins out there. So of course, I have to weed out a whole bunch of scam coin, right? Stay away from a lot of coins out there that was pumped to the public. But for me, Bitcoin is that network that, to me, Bitcoin is more valuable than any other coin, in the market at the time. And that's when I kind of like research on the XRP as well. And to me, XRP is also valuable. But again, it's a long-term thing, it takes a long time for people to come up to come to that conclusion, But anyway, so when I see this, I was like, oh man, next time. So this is when I start to kind of be more profitable and more long-term mindset, because I was like, hey, if this happened, it could happen again. And so because of the nature of Bitcoin, if you don't know anything about Bitcoin, has this 4 years of, what is it called? Those, they call it halvening, meaning that each 10,000 block or 100,000 block, don't quote me on this. I'm not an expert on the technical aspect of it, but the value of Bitcoin comes from the fact that it's fixed amount, and the fact that each 4 years it's halvening, meaning the miner's only going to receive half of what the transaction fee would be. Now, if you own Bitcoin before, you would realize that you have to pay the network, just like Ethereum, right? You pay in Ethereum in order to transact on the Ethereum network. The same way, or looping or any, it's kind of the same principle, okay? With the exception that Bitcoin is a fixed amount. There's only going to be 21 million Bitcoin in the world, no matter what. And so that was the education that I got from there. And this is where I start to accumulate. this drop right here, okay, this drop, I did not pay attention to this. If I had known this is COVID right here. If I had known about COVID, because I forgot about Bitcoin until this, and then I was like, it's gonna drop down, right? Like the same mentality. 1 second. So when I see this drop, I'm like, oh, it's gonna come crashing down, right? Even though I know a little bit more, I was like, yeah, it's over. So I forgot about it, and of course, learning about stocks and all that stuff, and kind of focus more on the stock aspect of it. I did not start to buy it until this right here, around $18,000 or so, right? Because again, like around that, I got lucky. You could say that I got lucky, but I knew the long-term kind of long-term thinking that I had before. It's like, man, if I could hold it for a long time, I would be able to kind of get more. So now around this time, I had more money in order to deploy. Now more, it's not that much to most of you guys. I bet you anything, but to me, it's a lot. I've been accumulating, whether stocks, whether in portfolio wise, I learned to kind of invest, trade and all that stuff. At the time I was doing swing trading, meaning like I hold it for a while, and then if it goes up 20%, I would sell, or even 5%. At that time, it was like, oh my God, there's a lot of money, right? But then when I see Bitcoin doing this, I start to accumulate right here. And around that time, because of my education back here, I knew that Ethereum kind of moves the same way and moves right after Bitcoin usually move. And so when I sold my Bitcoin, I sold around this to went all in on Ethereum, right? And I did profit quite a bit because I did know about, okay, eventually it's going to go down somewhere. And so that's when I kind of sell around 50,000 Ethereum. I went with Ethereum. I sold around $3,000 per coin there. And so that was my, education, because if I hadn't known this, I would not have sold for a profit, because again, I was not prepared. I didn't know what's going on. I would have keep buying up here, This is Bitcoin, by the way, but anyway. So that's the education that you have to have in the stock market. And I think it's the same way with GME, right? Let me draw the conclusion here. I know you guys are here a long time. But the conclusion here is that you have to learn about what it is that you're investing in order to profit off of it in the long term. If you only care about the candle in, candle out, you are not going to capture that massive profit that you want. Now, if you know the insider information, when GameStop gonna run, because you are either the market maker or whatever, you're gonna make a whole bunch of money. Any idiot would be able to make that money if if you have all the data right in front of you, of course, but that's illegal, right? You're not supposed to know all that, and that's not even fair too. This is the type of market that we have. But I promise you, that if you understand the value of GameStop, you would not be crying about this price action at all. In fact, you'll be celebrating, because you know that this price is so low that you could get it at $13, right? Now, I'm not saying that it's like the same as Bitcoin here. No, that's not what I'm trying to say. You might be able to, 10x this company because it's a company. It's so important that you don't equate it to like Bitcoin status. Okay, now it depends who you ask, right? To me, GameStop worth a lot more than today. I don't know how much more. It's just, to me, based on the leadership, based on the company itself, the brand, based on the investor that we have in this room, 4 of us right now, the company is worth more. And so if you understand that, you would not be crying about this price. You'd be celebrating. And I'm celebrating every day because now I have the opportunity to accumulate this company at this price. That's it. Right? And how long? How long is it going to be, up from here? We don't know. We don't know how long are they going to be able to do this to this company. It's remained to be seen. But to me, the balance sheet itself is going to tell the world that GameStop is the company to be in. Now, if you look at the earnings right here, so there's been an estimated earning report on, so let's see, date right here, December 12th on a Tuesday. Again, this is an estimated date. It's not a set in stone date yet. It could change. So we still have, let's say, how long? I would say close to a month and a half left of that. So don't be surprised if you see GameStop price beating, from this live stream here. I'll leave you at this. Don't be surprised to see GameStop third quarter being terrible, quote unquote, okay? Because this company is doing very bad right now. 11% down in 3 months, that's a lot. That's a lot to, it cannot be ignored. So GameStop might suffer for that as well. But again, I'm sure that because of the billions of dollars that we have, $300 million of marketable security, I think they could weather that storm. I don't foresee us losing money anymore than, $20 million at a time. Why did I come up with that number? It's just math, right? If they lost if they lost $2.8 million last quarter, then 10 times that would be $28 million. So I don't foresee them losing, 10 times the money from last quarter to this quarter, right? But it could happen. Again, anything could happen. So, and on top of that, I bet you anything, if they were to beef up the inventory like they did the year before, the loss might be shown a little bit steeper even, right? So it might be like $50 million in the negative because they want to beef up the inventory to get ready for quarter 4. So, yeah. Oh man, that was a long live stream, you guys. Thank you so much for joining. Reading comment right here. GDP. Yes. All right, you guys. I will leave you here and to contemplating on the third quarter. I'm so excited about this third quarter. Thank you again for joining. Thank you, Morans, for sending people over. I was so nervous, but it's a part of learning experience, I guess. And again, thank you for sitting through all this shenanigan. GameStop gonna win, you guys, and don't be falling asleep on this price. This price is a steal. Again, insider bought up here, you guys, up here. Okay, this is insider bought up here. And if you could get it at this price, man, you get it lower, even lower price than the executive out there. Ryan Cohen bought up here, 21 somewhere. Ryan, Adam Addo bought right here. And if you're smart, you get to accumulate down here. Okay? All right, guys. Stay vigilant. Be more and invest better. Okay.